Hey, you're tuning in to this week's episode of Ask the Instructor every Wednesday, 12 noon Eastern Time. Today, we're going to be talking about calculating rental prorations, so stick with us. You're watching Ask the Instructor.
You are watching
Ask the Instructor every Wednesday at 12 noon Eastern Time. I'm John Chrismo. Oh, you're watching Ask the Instructor. Hey, welcome to this week's episode of Ask the Instructor. I'm John Chrismo, and this show is brought to you by the Tampa School of Real Estate. If you're thinking about starting or enhancing your real estate career, check us out at tampaschool.com. We'll help you get a Florida real estate license, help you meet the post-licensing and continuing education requirements, and overall just take your career to the next level because all of our education we offer is with a purpose. Also, we've got a lot of great exam prep tools. Make sure you check out passfirsttry.com. That's passfirsttry.com. You'll see all these links in the little banner right across the bottom here. And you can also give us a call at 813-928-0106. Again, that's 813-928-0106. Or if you don't like to talk on the phone, just send us a text message because we're eager to assist you. And that's what we're doing today. We're helping you understand how to calculate a rental proration. So on last week's episode of Ask the Instructor, and if you're not subscribed to this already, what are you doing with your life? Subscribe to our channel on YouTube, like our Facebook page, turn on the notifications so you get notified every time we do these episodes, because what we're talking about today is something that's essential when you're working with investors who are buying and selling income-producing property. This is important to tell your buyers of income-producing property, even if this is a buyer that's buying a property to live in, but they have to wait until the lease is up for the tenants. This is money they're going to be able to collect until they're ready to move in, and they can actually collect money for the month that they're buying the property in. We're going to dive a little bit deeper into calculating this out, but ultimately this is money your buyer's going to be getting at closing, and ultimately money the seller's going to have to pay at closing. So this is an essential calculation to understand how much money the buyer's going to get and how much money the seller has to pay. Just like the property taxes we did last week at Wednesday, 12 noon Eastern Time on Ask the Instructor. But this week we're dealing with rental. Now, the big difference with a rental proration, look at that, that's pretty. Got a nice fresh set of markers. Oh yeah, you guys are going to be liking this today. So the big difference with a rental proration as opposed to a property tax proration, there's really two key differences. The biggest one is that we're over just a single month. Unless you're dealing with rent that's paid annually, but you don't really ever see that. It is possible, but not something you're going to see on the exam, and definitely not something you're going to probably ever run into in the real world. So with property taxes are billed out for a year. It's billed out for 2016, 2017, 2018, whereas rent, it's billed monthly for January, February, March, April, all the way to June, July. Now, when you think about rent isn't paid at the end of the month, and that's the other big difference we have. So property taxes, again, based on a year, rent based on a month. The other big difference is property taxes, you pay those at the end of the year. You pay them in arrears. Rent, on the other hand, you don't pay at the end. It's going to be hard for you to find a landlord that's going to be okay with you renting the property and then paying them the rent, possessing the property and then paying the rent. No, they usually require the rent up front, whether that's a residential property, a commercial property. You might be able to negotiate maybe a free month's rent or whatever it may be, but when rent is due, it's due at the beginning of the month. So that way they can begin the eviction process if you're not paying the rent within 3 business days of their demands. Other important stuff to know about rentals. So let's take a look at, let's say we're dealing with, what are we in, June here. So we've got the month of June. So we've got June 1st here. And now June has 30 days in the month. Now, if you don't remember this from the property taxes, or maybe you did from last week, or maybe you didn't watch last week's episode about property taxes, go back and watch that, because the property tax proration is a lot more likely to come up. That should come up in every real estate transaction, whereas rental prorations only occur when there's a tenant in there paying rent. But going back to this here, you want to know how many days are in every single month. Now, in the real world, you can obviously just look at a calendar, Google it, whatever it may be. Now, on your exam, you don't have those luxuries. So you can do two things. You can remember the rhyme, 30 days have September, April, June, November. So again, that's 30 days have September, April, June, November. Or you could also do the knuckle trick. And I like the knuckle trick because I always feel like I'm forgetting a month when I'm using the rhyme thing, just because I don't like rhymes. You say it enough times, it's going to seem familiar, but I like the knuckle trick. It's tried and true. Your knuckles represent the months with 31 days in it, and the spaces between your knuckles represent the months with 30 days, or in February's case, 28. And what you're doing, you're working your way across January, February, March, April, May, June, July, August. Now, the key thing when you get to the end here, July, August, they're back-to-back 31 days. So that is right that you're going to double hit your pinky or whichever direction you're going. So July, August, September, October, November, December. And that tells you how many days are in every single month. So make sure you've got that down. Now, June, we're dealing with 30 days. Let's say the closing date is today, which is June 21st. So here's our day of closing, June 21st. Now, so this is basically the breakup of the month. We've got our seller over here. This is the time the seller owned the property, and we've got the buyer over here. This is the time the buyer owns the property. Now, again, going back to when rent is paid, rent is going to be paid up here. So who has all the rent? Well, it's the person that they're paying rent to on June 1st, which is still the seller. So right now, unless we do a proration, the seller's getting this entire month of June, which that's not fair. Definitely not fair, because the buyer owning it for just a little under about half of a month, maybe about a third of the month that we're looking at here. Now, an important detail that you absolutely must have, especially if you see this on your exam. This is a very likely question to show up not only on your pre-licensing exam for sales associate, but for brokers as well as post-licensing courses. This is a topic that the FREC likes to test you on. So one of the key details you need to know is who gets June 21st. Now, typically how this would work, and this is negotiable, but typically what happens most of the time is the day of closing belongs to the buyer. Now, that is negotiable because if you remember back with property taxes, the seller really wouldn't want that extra day because that's an extra day they're obligated to pay property taxes for. But now in this case, the tables are turned here, because the more days that you get, the more rent it is that you're getting. So it's not necessarily you having to pay, it's getting paid here. So the seller might want to try to negotiate out getting that day of closing, but typically then they'd also have to pay the taxes for that day as well. So, I mean, it might end up being a wash, however it works out at the actual closing table on the closing statement for this here. But typically the way this works out is our day of closing belongs to the buyer. Now, when we're calculating out prorations for our closing statement, if we think of what goes on the closing statement, this isn't a complete financial history of everything regarding the seller and everything regarding the buyer. It doesn't talk about how much money they have in the bank. It doesn't talk about any of the aspects that deal with themselves or how much money it is that they're keeping. Maybe the buyer's buying this property for $100,000, but they really have $1 million. The fact that they have $1 million in their bank account isn't going to go on the closing statement. Just like how much money the seller's keeping for the rent isn't going to go on the closing statement. What goes on the closing statement is the transfer of funds. So what needs to get recorded on the closing statement here is the money the seller has that's getting paid for the buyer. But ultimately what's getting paid from the seller to the buyer is this time period right here. So that time period that the buyer owns the property, those buyer days of the property, that's what we're trying to figure out and calculate out. We're figuring out how much time, what's our dollar amount of the rent from June 21st to June 30th. That's ultimately what our question is with rental proration. That's why I love drawing these out with these little number lines like we do here. It makes a lot of sense with the taxes. Now with taxes, if you remember, the thing that we were doing differently is we're looking at the seller's days, and this is the number we're trying to find out for what this equal to for property taxes, because this is what the seller has to, again, give to the buyer. We're still going to have that same breakdown of debit to the seller and credit to the buyer. It's a good rule of thumb for pretty much any proration. There's very rare circumstances. It's number one, if taxes have already been paid, and number two, if rent gets paid at the end of the month, which you really never see. Even less likely than taxes already being paid on the property. But aside from those two exceptions, it's always going to be debit to the seller and credit to the buyer. Meaning the seller has to pay, that's what a debit is, and the buyer is to receive. That's what a credit is. So debit to the seller, credit to the buyer. And that's really easy to remember because most of the time that's going to work. Probably 9 times out of 10, even with exam questions, that's probably how it's going to break down: debit to the seller, credit to the buyer. So now ultimately we need to find this dollar amount. We figured out how this is going to show up on the closing statement as a debit to the seller, credit to the buyer. And hey, if you're able to find out that much, you're probably able to slash out half the answer choices on a multiple choice exam. All the exams for your real estate license, whether it's getting your real estate license, the state exam, or any of the renewal exams, they're all 4-option multiple choice. And typically, 2 of those answer choices are going to be flip-flop, where it's credit to the seller, debit to the buyer, which that's really, like we said, very rarely that occurs. So you've already got half your answer choices down when you can know it's debit to the seller, credit to the buyer. And that's also important in the real world because that's the difference of who gets paid and who has to pay. But now let's find out the dollar amount, the number of this here, what these buyer days represent. Now this is something that I always tell my students whenever I'm teaching this proration, and specifically with a rental proration, because this is the #1 mistake that I see very often. And it comes down to figuring out how many days we have here. How many days it is that we're calculating out. It's a likely mistake to make when you're calculating out taxes for the proration for taxes, because you have to go across multiple months and you're doing a lot of very minuscule basic calculations of 30 days plus 31 days plus 28 days and so on and so forth. This one, it's another very basic calculation. What happens is a lot of people will think it's too easy, and you might be saying, John, how is this difficult? We've got the 30th day as the end of the day of the month and 21 days the day of closing. We do 30 minus 21, we end up with 9 days. Isn't that right? Isn't that the number of days we're dealing with here? And that's how most people are going to think with this. There's a word for a type of question that seems like it's one thing, but really the answer is something else. And it seems like it's very obvious that it's this thing, but it's really something else. And that's exactly, I wish I could remember what that word is. If any of you guys on the stream know what that word is, definitely put it in the comments. I'd love to refresh my memory on that. But ultimately, you would think this is 9 days, but what happens when you're doing 30 days minus 21 days? You're forgetting this day of closing. Which, remember, we drew this line right here, that this is where our division occurs, meaning that 21st day is on the buyer's side. And if you don't believe me on this here, because your mind is tuned in to not count in that day of closing, there's a real simple trick with this. You're going to feel like you're back in elementary school because this is how they taught you to do math probably, but it's counting on your fingers. And you might say, John, I'm not going to count on my fingers. Come on. I'm an adult. I don't need to count on my fingers. I know how to do math. 30 minus 21 is 9. Well, let's double check that math now. So we've got 21, 22, 23, 24, 25, 26, 27, 28, 29, and here we go, 30. Now, there was no sleight of hand there. I'm no magician. That's just me counting on my fingers there. We actually have 10 days that we're dealing with here. And it makes sense when you factor in that we're also including that 21st day. What happens when you do 30 minus 21? When you do 30 minus 21, you're only counting this here. So that's what you have to keep in mind. You're not including that day of closing when you're subtracting the number of days in the month from the day of closing. So you always have to remember to also include that day of closing. So it's really like you're adding an extra day in there if you're just doing the basic math. But hey, if it ever kind of stresses you out and you're trying to figure out exactly how many days there are, real simple solution, just count on your fingers. You know, you can maybe hide that a little bit, just tap on your desk as you're going along, make it look like you're just playing the air piano or something like that. But trust me, counting on your fingers is going to seem childish, but you won't care when you find out you get the right answer, although you probably won't find out because they're very secretive about exam questions, especially with the state exam. But ultimately, that's very important that we know we're dealing with 10 days here, because that's definitely a difference for a buyer. For leaving out an extra day's worth of rent, that's not going to be something that they're happy about. They don't want you leaving out any rent or anything that they're entitled to, even if it is just 1 day, and it's going to be not that big of an amount. Now, we're going to take a quick commercial break, but when we come back, we're going to get into actually putting some more numbers on this and finding out, given a certain amount of rent, how much money would actually be entitled to as a buyer at the time of closing. I'm John Chrismo. You're watching Ask the Instructor. Send in your comments and questions in the chat box. I'll be watching those here. If you guys don't understand any of this stuff, let me know so I could break it down. We're going to be right back after this commercial break. Have you been thinking about starting a career in real estate? Enjoy an entrepreneurial lifestyle that allows for schedule flexibility with unlimited income potential. In real estate, the sky is the limit, and what you put in is what you get out. Learn more about a career in real estate at tampaschool.com. Do you wish you could make your own schedule? A career in real estate allows for unimaginable schedule flexibility. Whether you're just looking to make some extra cash in your spare time or become the next top real estate agent, a career in real estate allows you to call the shots. Find out more about a career in real estate at tampaschool.com.
Do you want to incorporate studying for your real estate exams into your busy schedule? Now you can review the key topics you need to know to pass your class and state exams with our MP3 audio review. Simply pop in your headphones or connect to your car to reinforce crucial information while you exercise or drive. Listen to the first unit for free at mp3audioreview.com. That's mp3audioreview.com. Does your current career allow for unlimited income potential? With a career in real estate, the sky is the limit. What you put in is what you get out. Find out more about how you can tap into the unlimited income potential of a career in real estate at tampaschool.com.
Hey, if you liked the show today, be sure to hit like and subscribe and post your comments. Thanks so much for watching.
You are watching
Ask the Instructor. Every Wednesday at 12 noon Eastern Time. I'm John Chrismo. You're watching Ask the Instructor. Hey, welcome back to this week's episode of Ask the Instructor. I'm John Chrismo with the Tampa School of Real Estate, and if you're thinking about starting or enhancing your real estate career, give us a call at 813-928-0106 or check us out online at tampaschool.com. That's tampaschool.com. We'd love to answer any questions you have about maybe starting a career in real estate, or maybe you already have a career in real estate and you want to take it to the next level. We're here to help you out, so make sure you reach out to one of our advisors. They're standing by, ready to help you. Now, what we're talking about today is rental prorations. Very similar to property tax prorations, but we did cover some of the differences that we have here. We're dealing with a single month rather than a year. And this is also less likely to occur in the real world. The only time you really have to calculate out a rental proration is when there's a tenant, when there's a renter in the property paying rent. Because what happens ultimately, again, our closing is today, June 21st, in the month of June. On June 1st or June 2nd or whenever it is that they collect rent at the beginning of the month, the landlord collected the rent for the month of June. And so the landlord has all of this rent for the month of June. And that's not fair to us as a buyer. Now let's say how not fair that may be. Let's take a look at just a pretty basic example, and we're going to complicate this a little bit more and add a little bit more levels to this here. So you need your rent amount. We already figured the day of closing, who's charged for that day of closing. Our day of closing was June 21st. It's charged to the buyer in this case, as it is in most cases. And now we just need our rent. Not our rent, our rent. So let's say the rent in this particular case here is $1,200. Let's say it's $1,200 a month. So that's our monthly rent that was collected at the beginning of June. And right now our seller has all that money, and we don't like that. We want 10 days worth of that money, since as a buyer, we're owning the property for 10 days. Or maybe you're doing this calculation for the seller and say, hey, look, in addition to these other closing costs, you'll have to also fork over 10 days worth of rent. And then they say, oh, I don't want to do that. Well, then you got to put that in the contract that we're not going to actually pay out any proration, which you could do, but it's definitely frowned upon. Anyways, so we've got this rent of $1,200. We've got 30 days in June. So our first step here is taking $1,200 and dividing it out by 30 days, which if my mental math serves me right, which it can play some tricks on me, we should end up about $40. Let's see, $1,200 divided by 30. Yep, $40 a day. So what that means is every day's worth of rent is $40. $40 every day for 30 days adds up to $1,200. So we've got $40 a day, we've got 10 days that we need to do the proration for, so ultimately we end up with $400. That's as simple as it is. You figure out your day of closing. The trickiest part here is figuring out who's charged that day of closing, and then also not forgetting to factor that in with your proration so you don't end up with 9 days here instead of the correct 10 days, because we're also including that June 21st day in our calculation there. And again, if that confuses you, if you're worried about getting that right, again, just count on your fingers and you'll make sure you get that exactly right. So $400 would be how much money our buyer would be credited, and meaning they would receive, and how much money our seller would be debited, meaning the seller would have to pay. Now, we don't care about the other, $800. We don't care about that other $800 here. This $800 is how much the seller gets to keep. And again, just like we don't have our net worth on a closing statement or what our other obligations are outside of this transaction, we don't care about how much the seller keeps. All we care about is how much the buyer gets paid because there's a transfer of money going on. Now with property taxes, that's how it's a little bit different with this. With property taxes, we're looking at how much the seller's dollar amount is because it's the buyer at the end of the year that has to pay the entire tax bill. So in that case, we're trying to find this half of the proration, whereas in rental prorations, we're just trying to find out how much that time the buyer owns the property is worth. So let's go ahead and complicate this a little bit here. Because you can see this is pretty easy. And now ultimately this complication, it's building on these same fundamental principles here. So let's say that we're going to go with the bigger property now. The last one was just a single family home. Pretty basic. Let's now say that we're dealing with a 10-unit property. So we've got 10 units. The rent is $1,000 per unit. So we've got 10 units, $1,000 per unit. Our day of closing let's say April 15th. So our day of closing is April 15th. And then it's also important that you know who is charged the day of closing, which let's just go with the normal rule of thumb. Buyer charged closing. And really, they're not charged in this case here. They're entitled to the rent for the day of closing. So charged isn't necessarily the correct word, but whatever you think about it, charged is probably more so with property taxes. But this is the information you would need to pull out of an exam question. It's not going to break it down for you where it's got all this stuff nicely laid out in a nice little chart here where it's just saying, okay, you got this, 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 and this, calculate the proration. It'll be a little bit more convoluted. It's going to be a little bit more wordy. But the reason why I like to write it down this way is because this is what you want to write down on your scratch paper. You're reading through the question, or maybe this is a real life scenario and you're getting the facts down in the scenario and you're just writing down what's important. You need to know how much the rent is. And if you're dealing with just more than one unit, you need to know how many units, because we're not just prorating the rent of a single unit, we're prorating the entire rent that was collected for the month of April in this case here. And then you also want to know who has to pay for that 15th day of the month. So let's draw out our little number line here. Again, we've got our number line. We've got April 1st. We've got April 30th over here. So we've got our month of April laid out. Our day of closing, April 15th. And the day of closing is charged to the buyer, or the buyer gets paid rent for the day of closing, however it is that it'll word it in the question. So what that means, again, here is our demarcation, and everything over, this is our buyer's days that we're trying to find out here. And then this is the seller. But we don't necessarily care about the seller. All we know is that the seller has all the rent for all of April. And we know that we want roughly about half. Now, the reason why I say about half, because some of you guys might say, oh, well, John, you said you're going to make this harder on this. This one's actually easier here because you know it's just exactly half of that. We've got 10 times 1,000 gives us 10,000. So this proration is $5,000. And again, I can't stress this enough. Count on your fingers. You're like, John, what do I need to count on my fingers for? The reason why. If we take 30 minus 15, again, this 30 minus 15 is only calculating up through here. If you count on your fingers, you'll notice this because you'll be going to count also this 15th of April. So what that means here, so this is 15, but with that extra day in there for the day of closing because we need to include this day of closing. And if you count on your fingers, 15th, 16th, 17th, 18th, 19th, 20th, 21st, 22nd, 23rd, 24th, 25th, 26th, 27th, 28th, 29th, 30th, we end up with 16 days. You can count on your fingers. That's the foolproof method. It really won't do you wrong, but the alternative way to go about this is just to remember And once you've done this enough, you probably won't need to count on your fingers for this here, but you just remember when you're doing this subtraction of 30 minus 15, that's only going up until the day of closing. You also have to add in the day of closing, so it's not just 15 days, it's really 16 days is the number of buyer days. So that's your first step, figuring out the number of days. Now we need to figure out our total rent, which easy mental math with this one here. We didn't make the numbers too hard. You might have a little bit more complicated numbers, but it's just really as simple as plugging it into your calculator. You're allowed to use a calculator in the real world, and you're allowed to use a calculator on your exams. The calculator you have to use in your exams is just a very basic calculator, but it could definitely do 10 times 1,000 or whatever those numbers may be. So we've got 10 units. We've got $1,000 per rent per unit. So we're collecting a total rent this month of $10,000. Or not necessarily we are. The seller did. The seller collected $10,000 in rent at the beginning of April. And so this seller has $10,000 for April, and the buyer doesn't get anything, despite the buyer owning this property for over half the month. And that's not fair. We want our buyer to get the fair share. So now we need to go ahead and calculate out the daily rate. In order to find the daily rate, what you're doing is taking this $10,000, that's the entire month, this entire April month from April 1st to April 30th is worth $10,000 worth of rent, which the seller already has. That's why, again, we're debiting the seller and crediting the buyer. The buyer gets paid, the seller has to pay. We're going to take this $10,000 that's representative of the entire month. Now, April, again, is another 30-day month. Remember, the April 30 days have September, April, June, November. See, I'm already messing it up. That's why I don't recommend the rhyme. I definitely recommend the knuckle trip. But whatever you got to do, make sure you know how many days are in every single month. So we've got 30 days in April, so we're going to go ahead and divide out by 30. Now, this one, let's see, what is that going to be, 300 and something? Probably have some repeating decimals with this one. We'll let the calculator do the thinking for us. We're going to take 10,000, divide this out by 30, and yes, we get $333.33. So that's our daily rate, $333.33. Repeating. Now, you don't want to just round it off to 33 right then and there. My recommendation, always leave this number in your calculator and then just hit times 16. So you're going to plug that in your calculator now and multiply, because every day in the month is worth $33 or $333.33, and we're trying to factor out 16 days to figure out this buyer's days, how much rent the buyer's entitled to. It's going to end up being a little bit more than half. It should be about 5,333 because we've got half plus an extra day in here. So 333.33333 times 16, and we get 5,333.333.3. So our rent for this, $5,333.33. At this point, when you get to the end, that's where you could round. You could maybe round a little bit earlier with this here, but you might be off by a little bit of change on your actual ending answer, especially with the property taxes, a little bit more likelihood that you're going to see something like that where those end up getting flipped around somehow. So that's going to be our proration, how much money the buyer would be entitled to. And you can see how this makes much more of a difference when we're dealing with a lot larger property, or really just more dollars in rent. Now we're talking about a $5,333 credit to our buyer, meaning that they're just getting $5,333.33 for buying this property. Really, it's for the rent that they're supposed to get for this month of April. So that way they start getting cash flow, they start getting that rent on day one for when they own the property. So that's definitely something you want to take into account. It's what you want to tell your seller that, hey, you're going to have to pay X amount of dollars. Based on the time of the month, we're going to have to pay a proportion of that month as the rent. And that's going to be typically expected. You can maybe put that in your contract that you're not going to do that, but that's not going to make your buyer happy. That could be the difference of the buyer taking the deal or the buyer not taking the deal, which that's a hefty sum for the buyer to be credited at the closing table. But in the reality of things, I mean, this is probably $1 million property if we're talking 10 units that are renting out for $1,000 a month, if not more than that. So for the seller to kind of try to complicate and make this deal that much more difficult over $5,000, it doesn't really make that much sense for them. If you tell them you got to pay out a proration for the month, they might just say no, but when you show them the actual dollar amount is, that's why it's important to understand how to do these calculations. And if you do this calculation, you can absolutely do the property tax proration, you could absolutely do assumed interest on an assumed loan for the proration on that. These prorations are very similar. Now, there is a little bit of a way where this could defer. Everything we've been dealing with so far is where the rent has already been collected by the seller, but now what happens if we're closing at the beginning of the month, let's say on the second day, but that rent doesn't actually get paid until the third day? We'll have a proration, but it's going to flip around. It's going to be a little bit more similar to property taxes. We're going to cover that after this short commercial break. Don't go anywhere. Send in your questions in the comments. I'm John Christmo. You're watching Ask the Instructor.
Have you been thinking about starting a career in real estate? Enjoy an entrepreneurial lifestyle that allows for schedule flexibility with unlimited income potential. In real estate, the sky is the limit, and what you put in is what you get out. Learn more about a career in real estate at tampaschool.com. Do you wish you could make your own schedule? A career in real estate allows for unimaginable schedule flexibility. Whether you're just looking to make some extra cash in your spare time or become the next top real estate agent, a career in real estate allows you to call the shots. Find out more about a career in real estate at tampaschool.com. Do you want to incorporate studying for your real estate exams into your busy schedule? Now you can review the key topics you need to know to pass your class and state exams with our MP3 audio review. Simply pop in your headphones or connect to your car to reinforce crucial information while you exercise or drive. Listen to the first unit for free at mp3audioreview.com. That's mp3audioreview.com. Does your current career allow for unlimited income potential? With a career in real estate, the sky is the limit. What you put in is what you get out. Find out more about how you can tap into the unlimited income potential of a career in real estate at tampaschool.com.
Hey, if you liked the show today, be sure to hit like and subscribe and post your comments. Thanks so much for watching.
You are watching
Ask the Instructor. Every Wednesday at 12 noon Eastern Time. I'm John Christmo. You're watching Ask the Instructor. Hey, welcome back to this week's episode of Ask the Instructor. Every Wednesday, 12 noon Eastern Time, we come into your phones, into your homes, your TVs, your computers, whatever devices it may be, just like our online course at the Tampa School of Real Estate that you can complete from anywhere in the world. And when I say anywhere in the world, you could take your Florida real estate licensing course from anywhere. We've got students from all over the world signing up for our courses, anywhere from China to throughout Europe to South America, all kinds of people that are maybe thinking of moving to Florida, because Florida is a hot place right now, not only because we're in the middle of summer, but it's a hot place to work, it's a hot place to live, it's a place that I very much enjoy. I don't really see myself leaving. Who knows, maybe someday, probably not. I love it here. Anyways, we're talking today about rental proration, something that you need to know how to do if you're at all involved in real estate, because this proration is very similar to the other types of prorations. And if you want to get involved in real estate, check out our website, tampaschool.com, or call one of our advisors at 813-928-0106. We'd love to help you out. Now, this rental proration, this is typically, if you're watching these videos to help you prepare for your exam, which is one of the primary reasons why we do these videos, to help our students not only prepare for their exam, but also to understand this in a much more detailed, greater level, so they don't just know enough to pass the exam, but they've mastered this material so they could go out confidently into the world, knowing this stuff inside and out, knowing that I've got no problem working with an investor, I know how to calculate rental prorations, I can figure out the rest of the stuff. And that's what we're here to do. We're here to not only teach you the required knowledge, and that's a big part of why we do these extra live shows every Wednesday, and also on Friday we do State of Real Estate, to give you guys the confidence that you need to help you be successful in a real estate career. But anyways, back to the rental prorations. If you're watching this to study for your exams, this is how it's typically going to be structured for an exam type of question. And this is typically how a rental proration actually works out in the real world, where we have a rental proration going on for rent that's already collected by the seller that needs to be paid by the buyer. But now let's change something here. Let's flip this around. Let's say the rent has not been collected yet for the month. And you might say, John, how is this even possible? How is the rent not collected for the month? What kind of landlord collects rent not at the beginning of the month? Well, it's still probably the beginning of the month, but we might have something along the lines of, and you'll see this a lot, especially with commercial leases, I would say probably more so this happens, is let's say that the first is Sunday or Saturday. The second is Sunday. And the third is a Monday. But let's say the third isn't just any Monday. Let's say it's Memorial Day or Labor Day or 4th of July or some holiday that basically says, hey, this isn't a business day. So really, our first day of the month, it's a business day in this case, is Tuesday. Now, even if it comes down to residential, after the landlord demands the rent, the tenant has 3 business days to comply with this here. So what we may have is rent not hitting, and especially if this is a holiday, until the 4th of the month. So let's say, in this case now, the rent is actually due on the 4th of the month. But let's say our closing, for whatever reason, is happening on this holiday, which you might have to think a little bit more creatively here because you probably wouldn't do the closing on that day. It would probably be this day. But let's just say, for the sake of going out with this, because this is hard to recreate this actually in the real world here, this is our day of closing, and that's a holiday. Maybe it's enough of a holiday where the tenants don't have to pay rent, but not enough of a holiday where they'll still do the closing. It's probably the flip side in the real world, but again, this is a very rare scenario that we're having to really stretch ourselves to create, but this will help you understand this in such a more in-depth level. So this is our closing day, and this is our rent payment. So if this was our closing day, the seller basically does not get any rent. They're not getting any rent because the buyer's collecting rent for the whole month. And they might just make it easy. If we did have this weird scenario where this actually does occur, they might just make it easy and say, oh, you know what, don't worry about those first 3 days of the month's worth of rent. You could have that as a closing gift or whatever it may be. And that could definitely happen with any one of these prorations for the most part, because remember, these prorations are negotiable. But let's say the seller says, oh no, I want those 3 days. I want those 3 days out of the month. Let's say the month that we're dealing with here is July. And really, again, we wouldn't, let's not say July. Let's say August, because July 4th, that wouldn't even be a closing day. Or again, that would not be another business day because that's Independence Day. So we celebrate that here in the United States. So let's say that we're dealing with August here. So let's draw on our number line for the month of August. And really, whenever you start to get confused or not understand, you're trying to really understand what's going on here and what they're talking about here, I definitely recommend trying to make this as visual as possible. That's why I recommend doing these little number line things here. So we've got August 1st. Now remember, with August, we've got 31 days. So our end of our number line here is actually the 31st, not the 30th like we've been dealing with those 30-day months. And now our day of closing is the 3rd. So we've got our day of closing right here, August 3rd. It's a very small proration we're going to be doing for the seller's days. But that's what we're figuring out here, because on the 4th, this is when the rent gets paid. So the buyer has rent for the entire month of August, even those 3 days that the seller owned the property. And let's just say, because maybe the seller's trying to get an extra day out of this here, that they say, oh, you know what, I want the day of closing. So that also gets negotiated out, where let's say it's the seller gets closing day. So it's just overall an odd, weird transaction, which is very different than the norm. Now, when you think about this stuff and you break it down and you structure it out like this, it's really not too different. But ultimately, let's say if this was our closing day here, that 3rd day, and we're going to be factoring this in as a seller day, that means for our seller, and again, you could count out, you could draw out and count them here, but we've got the 1st, the 2nd, and the 3rd. So we've got 1, 2, and 3 days for the seller. So we've got 3 seller days, or 3 days the seller owned the property. Now, again, we don't care about how much money the buyer gets to keep. We're not concerned with how much the buyer gets to keep. What goes on your closing statements is how much transfer is occurring. And what we're going to be doing the transfer for is the buyer in this case is actually going to be debited and the seller is going to get credited because the seller is getting paid. That's what a credit is, where you're getting paid, you're receiving money, that's a credit, and the buyer is getting debited. And you can see how this is reversed. This is very rare to happen, and we had to really kind of stretch it here to make up a situation where this would occur. But this is where the buyer is actually having to pay for this rent. And now the only other thing we need in this question here is how much our rent is for the month. So our entire rent for the month, let's say it's a large property and we're dealing with $20,000. It's multiple units. And this is another part that I want to stress for all these math word questions. In the real world, it's probably a little bit more obvious when you're dealing with a 20-unit property versus a 1-unit property. But maybe it's not so obvious on the exam, especially if they say something along the lines of maybe a duplex. That word duplex is not a number, so it doesn't stand out in a math question, but it ultimately is important because it tells you you're not dealing with one property, you're dealing with two properties, two sets of rent here. So you want to pay attention to the wording in these math questions, and that $20,000, that would be representative of our total rent because, maybe they already did the math for you. Maybe they're telling you it's 20 units, but they're saying the total rent is $20,000. Then there's no math to do because they already did the math because it's got that word total in there. So I can't stress that enough to make sure you pay attention to the details. The words in the math questions sometimes are more important and the trickier part than the numbers. So we've got $20,000 for this entire month of August. We need to find out the daily rate for this rent. So we're going to take the $20,000 and we're going to divide it out by 31 days. So we're going to do $20,000 divided by 31. And let's get our handy dandy calculator out for this one. 21,000 divided by 31 days, we end up with $645.16.129. So that's our daily rate. Now, again, you want to leave these decimals in your calculator, and then just go ahead and we got our seller days here. We're just going to take that. So every day is worth about $645. We've got 3 days worth that we're trying to figure out total. So we're going to do 645.16129 times 3. And we end up with a proration, put it here nice and large, of $1,935, 0.4837, so we'll say about 48 cents. And that's going to be this time the seller owned the property. That's what we just figured out there, was what those 3 days were worth. The whole month was worth $20,000. Those 3 days were worth just a little under $2,000. So you see, it's still something that, isn't going to be something somebody wants to shake their head at. It's definitely a calculation that you want to do, as are all of these prorations, even when you're down to just a few dollars. I mean, hey, that's a lunch. Yeah, you might, if it's blowing up the deal, let it go. But especially when it's customary, as prorations are. And I see a question coming in from Logan. So Logan's asking, who gets paid for the day of closing? Now, typically, the day of closing belongs to the buyer. That's not a rule, but kind of an unwritten rule. Unless otherwise stated, it's typically the buyer that gets paid that day of closing. That definitely can be negotiated otherwise, and although it should always say in your exam questions, if it ever does not say in your exam questions, the day of closing, you always want to give that to the buyer and credit the buyer for that day of closing, where they're getting paid for the day of closing. But the question may say otherwise. It might say the seller gets the closing day, which in that case, it's the reverse. And that can be negotiated in the real world, but typically it's the day of closing that the buyer actually ends up getting charged for. So thanks for sending the question, Logan. If any of you guys have questions, put it in the comments, put it in the chat. I've got them loaded up right here, Facebook and YouTube, as well as the Success Center. Let me know what you guys think about this at the very least. If you're enjoying it, give me a thumbs up, give me a like. Share it with your friends, because I'm sure they would love to see some real estate math. It might just brighten their day. I know it does mine. But that's our proration for this weird type of scenario. Now, let's do another one where it's going to be the seller gets that day of closing. Now again, this is something that typically doesn't occur. And let's use that same example we were dealing with earlier with the month of April. We had a 10-unit property, $1,000 a unit, And we had our day of closing of April 15th. And now the difference we're going to have, because so far that's exactly like the question we were doing just before this last one, but the difference is we're going to put in here, seller gets closing day. So day of closing charged to the seller, or rent for the day of closing belongs to the seller. There's a couple different ways they're going to word it, but ultimately you want to find out on that number line where that comes out. So we did this before with the day of closing charged to the buyer, and this will help us stress the importance of doing this calculation correctly and factoring in that one little detail there and how this could be the difference between a right and wrong answer or a happy or an angry client. So stick with us. We're going to take a quick commercial break. When we come back, we're going to solve this one out. I'm John Chrismo. You're watching Ask the Instructor.
Have you been thinking about starting a career in real estate? Enjoy an entrepreneurial lifestyle that allows for schedule flexibility with unlimited income potential. In real estate, the sky is the limit, and what you put in is what you get out. Learn more about a career in real estate at tampaschool.com. Do you wish you could make your own schedule? A career in real estate allows for unimaginable schedule flexibility. Whether you're just looking to make some extra cash in your spare time or become the next top real estate agent, a career in real estate allows you to call the shots. Find out more about a career in real estate at tampaschool.com. Do you want to incorporate studying for your real estate exams into your busy schedule? Now you can review the key topics you need to know to pass your class and state exams with our MP3 audio review. Simply pop in your headphones or connect to your car to reinforce crucial information while you exercise or drive. Listen to the first unit for free at mp3audioreview.com. That's mp3audioreview.com. Does your current career allow for unlimited income potential? With a career in real estate, the sky is the limit. What you put in is what you get out. Find out more about how you can tap into the unlimited income potential of a career in real estate at tampaschool.com.
Hey, if you liked the show today, be sure to hit like and subscribe and post your comments. Thanks so much for watching.
You are watching
Ask the Instructor. Every Wednesday at 12 noon Eastern Time. I'm John Chrismo. You're watching Ask the Instructor. Hey, welcome back to this week's episode of Ask the Instructor. I'm John Chrismo, and the show is brought to you by the Tampa School of Real Estate. Give us a call at 813-928-0106. We want to help you start your real estate career or help you take your real estate career to the next level. Again, the phone number is 813-928-0106, or you can go to tampaschool.com. All the links are floating here right across the bottom where you can check them all out. We've also got a lot of exam prep tools. If you guys like these videos that we do on Wednesday to help you study for your exam, definitely check out the tools we've got at passfirsttry.com. It's our recommended strategy to help you pass not only your class but also your state exams on the first try. So definitely check that out. That's passfirsttry.com. Now, we've got this example here on the screen, on the board. This is very similar to the one we did earlier, but the difference is with the one we did earlier, we said the buyer gets the day of closing. In this case now we're saying the seller gets the day of closing. So again, to help you visualize this, to help you understand it, I definitely recommend drawing out one of these little number lines. You'll get to the point eventually where you won't need to do this, but until you do, these really help you visualize this. You almost visualize this in your head. So we've got the month of April, so we've got April 1st over here. And then over on this side, we've got April 30th. Remember, there's 30 days in April. 30 days have September, April, June, November, or the knuckles. If you don't understand that, go back and rewatch the recording after the show. All these recordings for not only this show, but every show we've ever done is on our Success Center, tampaschool.com/success. Put in your email in there, and we'll email you guys every single time we do one of these live streams so you don't miss out on any of this juicy knowledge. So we've got our day of closing on April 15th. So April 15th, that's our day of closing. Now, with this question, that's the difference we had. With the previous question, it was the buyer gets that day of closing. The buyer gets April 15th. And that's why I always draw out April 15th or whatever the day of closing is as a box, because that helps you remember that this is a day here. April 5th, because really each one of these are a day. We have all these little days laid out all the way up to 15. So that's why you want to visualize that as a box, because that's a day that you do not want to forget. So if this 15th day is being charged to the seller, what that means is this is where we're going to mark it. That's going to be our line of demarcation. We're still figuring out the buyer's days. You're almost always going to be finding out the buyer's days. That last example we did, that's a rare situation where you're not concerned with the buyer's days. You're dealing with the seller's days because the buyer actually has the whole month worth of rent. But especially when you're this far into the month, it's going to be the seller that's already gotten that money. Could vary with that, but very rarely are you ever going to see that. So we're still going to be calculating out our buyer's days here. Now in this case, you want to be careful that you don't add in this extra day, because this day is on the seller side. It's not on the buyer side. So the seller's getting April 15th, and that's going to be really the only thing that's different in this example versus the one we did, the question before the last. The question before the last, we had the buyer getting that day of closing, so we really had 16 days here, the 15th, plus the 16th all the way up to the 30th, which adds up to 16 days. If you don't believe me, count on your fingers, 15 up to 30, you're going to end up with 16 days. This one here, it's a little bit easier. This one, you're less likely to get tricked like that, which if you're trying to take the exam, it's probably going to be where they're going to try to trick you. They like to try to throw a little wrench in your logic here. But with this one, we've only got 15 days. So we've got 15 days in this case here. 15 and 15. It's an even split now because that day of closing is charged to the seller, and that's what that difference maker is. And that's why, again, you want to draw that out as a box if you're visualizing this here, because that's a day that you don't want to forget and leave out and not use in your calculations. So we've got our entire rent. Again, it's 10 units times $1,000. We end up with $10,000 in total rent. So we've got our $10,000 total rent. There's 30 days in April, so we'll divide this out by 30 days. And that number we came up with, again, always trust your calculators with this. Don't always trust your mind, because it will play tricks on you. Even my mind will play some tricks on me. But I do remember for sure that we had $333 and 33 repeating per day. And now if this were an exam, if it were my reputation on the line, I'd still probably run that number through my calculator, even if I did just do the calculation, double check that. Just because, you know, this thing up here, it could play tricks on you. This here, as long as you're hitting the numbers incorrectly, you should be good. So we've got our 333.33, and that was a repeating decimal, if you remember. So we'll go ahead and throw in some extra threes in there just to make sure we've got an accurate number as possible. So we've got 333.33333 repeating. And we've got 15 days that we're dealing with here. So we're going to take that 333.33, which that was our daily rate, how much every single day was worth, and now multiply it by the 15 days we're trying to find the calculation for. So 333.33 times 15 days ultimately gives us, boom, a nice even $5,000. And that's the beauty of not rounding that off, because if we just did 333.33 multiplied by 15, we'd probably end up with 4,999.99. Which, yeah, close. You'd probably be able to tell the difference on the exam. There's not going to be $4,999.99 versus $5,000 as answer choices, but it's definitely a lot more reassuring when you hit it right on the head. And if you save your rounding to the end, that's what's going to happen for you. So we've got $5,000. We said it was an even split, 15 days here, 15 days there, and our math that we just calculated out verifies that. So that is rental prorations. With this, the key thing to remember, and this is though, if I were to give you one word of advice for rental proration, be wary of that day. Be aware of that day of closing. Not only when it is, that's the easy part, but who gets the day of closing, because that's going to be a difference between $5,000 and $5,333.33, which those could be two viable different answer choices on the exam, and that's where it comes down to. All the numbers don't matter. It's really just this one little bit of phrasing, who gets the day of closing. That's going to be the difference probably between two answers on any exams it is that you're taking that's involving not only rental prorations, but also property tax prorations, assumed interest prorations, or whatever type of proration it is that you may be doing. But that's rental prorations, an in-depth look at that. And hopefully, if you're doing any of this stuff in the real world, you could double check your title company. You could double check anybody's logic or thought process on this, because it's really easy, basic math that very likely to make a simple mistake, which is why it may pay to double check that extra $333 for that day of closing if we factor that in wrong, to make sure they're not trying to cheat you out of that day of closing there. But that is a rental proration. So if you guys have questions, if you're watching this after the fact, still put those in the comments. We try to respond to every single comment, question it is that we get. And hey, your topic that you send in might just make it onto next week's show. Next week, Wednesday, 12 noon Eastern time, we'll have another episode of Ask the Instructor. But for this week, that's all I got for you. I'll see you next Wednesday. I'm John Corismo. You've been watching Ask the Instructor.
Have you been thinking about starting a career in real estate? Enjoy an entrepreneurial lifestyle that allows for schedule flexibility with unlimited income potential. In real estate, the sky is the limit, and what you put in is what you get out. Learn more about a career in real estate at tampaschool.com. Do you wish you could make your own schedule? A career in real estate allows for unimaginable schedule flexibility. Whether you're just looking to make some extra cash in your spare time or become the next top real estate agent, a career in real estate allows you to call the shots. Find out more about a career in real estate at tampaschool.com. Do you want to incorporate studying for your real estate exams into your busy schedule? Now you can review the key topics you need to know to pass your class and state exams with our MP3 audio review. Simply pop in your headphones or connect to your car to reinforce crucial information while you exercise or drive. Listen to the first unit for free at mp3audioreview.com. That's mp3audioreview.com. Does your current career allow for unlimited income potential? With a career in real estate, the sky is the limit. What you put in is what you get out. Find out more about how you can tap into the unlimited income potential of a career in real estate at tampaschool.com.
Hey, if you liked the show today, be sure to hit like and subscribe and post your comments. Thanks so much for watching.
You are watching
Ask the Instructor. Every Wednesday at 12 noon Eastern time. I'm John Corismo. You're watching Ask the Instructor.